Hello traders, in today's video we're going to be talking about liquidations not on Bitcoin and Ethereum but on altcoins, Binance futures, altcoins. So this is one of my favorite tools to trade altcoins in the short term, and I'm going to show you guys how to use this pretty simply. So what you're looking at here is CRV USDT, so Curve Finance. Now what you're looking at right here is all the levels that were predicted and are predicted to cause liquidations for traders who are long or short on CRV. Now, as you can see here, price, let's look at this pattern right here. Price was consolidating around here. We can see that there are all these potential liquidations around here, and there are a lot of potential liquidations up here. Now, price ended up going higher, hitting a fair amount of liquidations right up here, and a lot of these liquidations. Once price stopped hitting liquidations, that's when it began to go down. And then you can see there's a bunch of liquidations that are potential right here. Price goes right down to them, triggers all of them, then goes back up. This is a very common pattern, guys, where basically price tries to hurt as many people as possible, and then once it has, it goes right back down, or if it just went down, it'll go right back up. Reason for this is due to cascading liquidations. Here's an example. So let's say we predict all these liquidations correctly, and these all are potential liquidation levels for traders. Now let's say that a few people get hit here. Once a few shorts get liquidated, that can cause a fair amount of buying, which can cause price to just go higher, hit the next liquidation level, hit the next liquidation level, and it just gets worse and worse and worse, keeps hitting liquidations until the buying potential has run out because all the liquidations have been triggered. So that is a pattern that I like to target, and an easier way to even target this pattern is to look down here. These are the cumulative delta of liquidation levels. Basically, when this is green, that means that there's more potential to hurt longs. There's more long liquidations than there are short liquidations. When this is red, this means that there are more short liquidations than long liquidations. So we would expect that if this is green, price tends to drop, and if this is red, price tends to rise. The only time where this won't happen is if price is in a very strong uptrend or price is in a very strong downtrend, because in those cases, this wouldn't matter. The trend would matter. Open interest would matter more at that point. But let's look at some examples here, because this is pretty brilliant, I'd say. We can see it's green here. We have a lot of potential liquidations to the downside and price falls. Then we have a fair amount of buildup of people who are shorting here. And because a lot of people are shorting, there were a lot of potential liquidations higher, and price went up. But then things get interesting around here. I'm going to do my best to zoom in. Let's see if yeah, perfect. Things get very interesting around here. Let's look at this. So price goes up, and then we get a point where there are actually more potential long liquidations than short liquidations right here. And then price begins to go down. Price stops going down once there are eventually more short liquidation potential than long liquidations. Price goes up. You get the idea. Then a lot of people start buying, and because a lot of people start buying, price has to liquidate those longs because it liquidates the shorts here. And then it liquidates, a lot of people start buying up here, and it just liquidates, sorry about that. It liquidates, let's get this back to can I get this guy back to normal? All right, and then you guys get the idea. And then it liquidates all of the longs lower. Now that's CRV. I had it on tier 1, not on tier 2. Tier 1, tier 2, tier 3, tier 64. Yeah, you can see that here. So this is a pattern that I really do like to trade. Now, if you were to say, well, Bennett, what would you trade right now? I wouldn't take a trade because there aren't enough potential liquidations on either side. I want to see an imbalance. I want to see something like that or something like that in order to take a trade. Now let's look at another coin. Let's go look at, let's do Sushi. All right. So what do we have here? So let's go look at this guy here. Yeah, same kind of pattern. We had a fair amount of potential short liquidations. I mean, a fair amount of long liquidation potential. So price crashes and hits a lot of liquidations, as you can see. And now we can see that I believe Sushi is more likely than not to go higher. We have a lot of potential to liquidate some longs. Now, liquidate some shorts, pardon me. Now, speaking of liquidating shorts, the darker that this is, the more potential there is to liquidate at that specific price point. So some examples of really pinpoint liquidation reversals are around here. You can see that there were a few $1 million worth of potential liquidations of shorts at this level, and price just about hit that level and then reversed, as you can see. Although I would have expected price to go a little bit lower to trigger all this liquidity, to trigger all these liquidations. Again, come on. It's like the accidental zoom in's killing me here. I would have expected price to go a little bit lower to trigger those liquidations, but I think the reason why price went higher is because there's still more potential to liquidate the shorts than there is potential to liquidate the longs, as indicated by this being red. So as you can see here. So with this, I think that this is a pretty decent buy signal. But if you wanted to time your buy correctly, maybe you'd want to wait for this to get like down to here, to get below these lows. Because the best potential time to buy is when there's just so much potential shorts to be liquidated. You know, when this was down here at, what number was this, 20 mil? 56 mil. When this was down to 56 mil, you know, this would have been a pretty nice time to short-term buy. You know, and if you had bought then, you would be in decent profit now. So that's some examples. And of levels to target, I think that if price can get above these highs, we're gonna get a large liquidation spike. So maybe buying and then targeting these highs, like selling and taking profit here, wouldn't be a terrible idea. So this is the kind of way that you can begin to build a strategy through using liquidation levels. All right, Chainlink, a coin that has had a lot of craziness happen. Oh yeah, speaking of craziness, this is insane. Yeah, so I think this is an example of a strong trend. Kind of like what I was saying, that this system of always hunting the side that can cause more pain, it tends to happen, but in a strong trend, it will not happen. This is a very good example of that. Strong uptrend. And you can see that just because this is green, it doesn't always mean the price is going to fall. Just because there's more longs liquidate doesn't mean price will always go there. And we can see prices recently really soared, as you can see here. But there's so much potential to liquidate a fair amount of longs. So I would not be shocked to see a sell spike. Sell spikes after a large buy spike happen more often than you might think, in my humble opinion. And if you might say, okay, Bennett, so if you think price is going to fall, give me a price where you think it will stop falling. Well, a pretty big area is here. This has the potential to liquidate a lot of people. So if price goes down to, what is that, right below 22, it's the upper 21s, like 21.7, 21.8, this could cause a lot of damage. An example of something that had happened recently with a size almost this big, this was 11.45 mil. These were about 11.45 mil as well. You can see that the liquidation predictor predicted, right? What was it like here? Yeah, there'd be a fair amount of liquidations here, and you can just see those cascading liquidations go higher and higher. This is exactly what I was talking about before, and this is why we choose to use tools like this as well. I'm curious what happened with these bubbles though. I'm gonna have to reset it, but oh, someone bought a fair amount, and then price went a little crazy, as you can see. So yeah, I would expect Link to probably, a good pullback area would probably be right below 28, because that's where a fair amount of traders would probably get liquidated. Now, 21.7, 21.8. Now, if we're talking lower than that, I think that 21.379, 21.4 looks like right below these lows. There's a fair amount of untapped liquidations as well. But overall, as weird as this sounds, I feel like buying a put or shorting might not be a terrible idea, risk reward wise. So that's a really interesting chart. You know, that's definitely one to look at. But yeah, I find it really interesting to look at the predicted liquidations and just trade that way. This is a very different way of trading, more of like a shark mindset of hunting, you know, other traders instead of using RSI and hoping for the best. Here's a great example. Price goes up, and we can see we have a lot of potential long liquidations. Price goes down, hits really like all of those liquidations of all those longs, and then after it's hit all those liquidations of all the longs, then price rises. And if you had this kind of tool and you knew how to use it, well then, you know, right as I was making my point, it's like, nope, I'm going to spaz out. Right as I compliment the tool, it's like, nope, I'm going to spaz out. If we look here, you can see right after all of these major liquidations have been hit, that's the time when price reverses. So trading this would have been, you know, maybe putting in bid here and then taking profit higher. But this is definitely a really good example of when to buy. Cascading liquidations here, you can see that this did predict the liquidations correctly. Basically, guys, what's happening is price goes up and a lot of people buy. Because a lot of people buy, they can get liquidated if price goes down here if they use 25x leverage or 50x leverage in some of these cases. Now, with this, what tends to happen is when price falls into a liquidation area, it falls very aggressively and quickly. And this is an example of what happens. This kind of movement is just one liquidation after another being hit. How do we take advantage of this? Well, if you use this tool and you are looking for a way to take advantage, two things you can do. One is targeting and one is reversal trading. So targeting is when you do something like this. We see a lot of potential liquidations of longs. We short and then we take profit after the liquidations of longs have been hit. Targeting them. Reversal. So reversal would be putting in bids here to enter into a long position and then to take profit on that long position after potentially some shorts have been liquidated. It's all up to you. I do like the targeting one sometimes a little bit better because it's kind of nice because you can short here and then use a stop loss, like let's say I don't know why I keep spazzing out. Use a stop loss higher and then use the take profit lower and have the risk reward 1-to-1. And I think that is pretty good. Okay, so that is one thing you can do. All right, one last example. Let's do Aave. And I don't even know how many potential liquidations Aave will have, or if we'll even be able to get any good data from this. Yes, this overall looks pretty bullish, and just another example of we have all of this potential liquidation higher. But this chart looks a lot like a lot of other charts because, as everyone knows in crypto, it's very intercorrelated, incredibly correlated. Okay, let's end on XRP because XRP, I think it was in a bull run, was in a pretty big uptrend recently. But yeah, I'd recommend this kind of strategy for traders who trade shorter term or for traders who trade more medium term. This is definitely going to be more of a tool for you. Oh Lord, especially when paired with open interest and sentiment. Yeah, this is a good one to end on. So we can see here, good time to short because this is green. Boom, awesome. Good time to buy. This is red. Wow. Cascading short liquidation after cascading short liquidation. It's very violent. And we can see there's a lot of potential long liquidation, time to short, price goes down, kills them all, and then great time to buy right here because there's a lot of short liquidations. And to show you guys a little bit more pinpoint, because there's like a lot of colors, looks like a children's book in a restaurant basically. Yeah, so right here, so this would have been the best possible time to buy. You can see that there's a fair amount, there's hundreds of millions of dollars worth of short liquidations higher, and that right there would have been a very good time to buy Ripple, XRP, at around 0.69, 0.7. Now we can see the same thing happens here, lots of potential long liquidations and then price falls. So what I would expect now is if Bitcoin doesn't, I'll put this on tier 3, make it a little bit cleaner. If Bitcoin doesn't continue going higher, I'd expect XRP to be short-term a little bit more bearish. Let's do tier 2 actually. A little bit more bearish. And the reason I say that is because both XRP and Link have a lot of potential long liquidations. So I would be more inclined probably to potentially short this and to target some of those liquidations around here. So this is a tool that really anyone can use with just a little bit of practice. And again, this tool is going to reveal where other traders are going to get liquidated. And if you want to not be liquidated and you want to start hunting the guys that get liquidated, then this will probably be the tool for you to use on altcoins. Of course, you can change this around. You can use Bitmag. Don't do this. Bybit, Binance, you can use other kinds of data. But my favorite so far has been doing this on altcoins and just looking for imbalances of when there's more potential to liquidate longs versus potential to liquidate shorts. Happy trading. Hope this helped, and start liquidating others.